Well, hello, everyone. Cynthia Tomane once again with Interactive Brokers, and thank you for joining today's webinar on how to become eligible for trader tax status benefits. I'm very pleased to have Robert Green with us, or back with us today for our presentation. Robert is a CPA, but also the CEO of GreenTraderTax.com. So with that, Robert, thanks for joining us. I'm going to go ahead and pass you the controls so that we can get underway here today.
Thank you, Cynthia.
Okay, take me just one moment there. I found my panel, so let me get you access to the presenter. And here you go, Robert. Please share your screen and we'll get underway.
Okay, let me just minimize the control panel and get started here. Welcome, everyone. Today's session is how to become eligible for trader tax status benefits. Our company is Green Trader Tax. It's August 8th, 2017. Watch that clock because tax reform may be coming soon and make some changes. I'm the managing member of Green, Neuschwander, and Manning, LLC, and the CEO of Green Trader Tax. We focus on traders. It's a real profession, and other tax professionals and solution providers underserve them. Traders deserve tax advice from CPAs and tax attorneys who are acutely aware of different tax laws and regulations that apply to them. I'm a leading authority on trader tax. Each year we put out the Trader Tax Guide. It's been over 20 years now. I'm also a contributor to Forbes, wrote the Business of Trading column for Active Trader magazine, and you'll see our content on leading brokerage firm websites, including Interactive Brokers. And you should stay tuned to my blog posts. You'll see me in all the leading media, Barron's, New York Times, Wall Street Journal, and you'll see me at the Traders Expo as the leading speaker. This information is educational. It's not intended to be a substitute for specific individualized tax, legal, or investment planning advice. I'm going to show you how to become eligible for trader tax status, but you're going to see that there's golden rules, lots of complex factors. A declaration is as much of an art as a science, so you may want to consult with me for my judgment about it. So that's where you need specific one-on-one advice from a qualified tax advisor, CPA, attorney, financial planner, or investment manager. Now, I, Robert Green, and the Green companies are not affiliated with Interactive Brokers. They're a brokerage firm. We're a CPA firm. The presentation today is based on current tax law, but we're going to talk a little bit about tax reform changes coming in late 2017 or 2018, if in fact they get done. Now, the overview today is about trader tax status. Why is that important? It drives many key business tax breaks like business expenses. They always get the golden goose in the tax code now and post-tax reform. Also, business ordinary trading losses. Imagine being able to write off a big loss rather than getting stuck with a 3,000 capital loss limitation. The biggest pitfall for traders. So you need Section 475 for that. And lastly, through an S-Corp, you can arrange employee benefit deductions, including a powerful retirement plan deduction, up to $60,000 for over age 50 on a solo 401k. And you can deduct those escalating health insurance premiums. A sole proprietor trader or an investor can't do that. So these items that I just mentioned are deducted from gross income, where you get a dollar-for-dollar deduction without restriction. Contrast that with investment expenses, which are subject to itemized deduction limitations, AMT preferences, piece limitations. There are limitations for capital losses, as I explained above, and there are wash sale loss deferral adjustments. Trader tax status is your ticket out of all those problems. Think about tax reform. They may repeal all investment expenses, but safeguard business expenses with trader tax status. This is your ticket to tax savings. It delivers many tax benefits. Again, 1, business expense treatment. 2, the option to make a timely election for 475 ordinary gain or loss treatment, the tax loss insurance I call it. 3, Form an S-Corp to unlock employee benefit plan deductions, including health insurance and retirement plans. Now, here's the thing. You assess your eligibility for trader tax status each year. You consider your facts and circumstances, which can change year to year. A trader may qualify for trader tax status one year, but not the next. Sort of like qualifying for the Indianapolis 500. You do your laps around the track. You either traded enough to it's analogous to taking the bread out of the oven each year to see if it rose to being bread or it's flatbread. So that will change from year to year. Now, some of you are full-time, very active traders, and that does not change much year to year. Certainly not for what the requirements are. But some of you straddle the line, and you may go below one year and be above the next year. So you have to assess it each year. Now, if you elected Section 475, the tax loss insurance, and later don't qualify for trader tax status, you must suspend use of 475 treatment until you requalify, since 475 is conditional on qualification for trader tax status. Congress did not want to open the floodgates on ordinary loss treatment to 10 million investors in America. They only want to give that to people who are in the business of trading. They expanded it in 1997 from dealers to also traders in securities and or commodities. So as long as you are eligible for trader tax status, TTS, you must use the 475. It's not optional. You can't turn that switch on or off each year at a whim. You must be consistent. Now, it would be inappropriate to say you don't qualify when in fact you do. Now, in almost all cases, you want to use that 475. It's a good election. You're not going to want to turn it off. Now, you can revoke a 475 election on a timely basis in a similar manner as making the first election. So let's say you have 475 this year, and for some reason next year you don't want it, you could revoke it by April 15th, 2018 on time with an election statement followed by a 3115 with no fee. Congress, the IRS changed the law the past couple of years to make it a lot easier to revoke 475. But again, you're probably going to want to keep it. Now, what about a partial year? You can use it, trader tax status, for a partial year. You might only qualify for TTS for part of a year and use it during that period of the year only. Don't let an IRS agent say you had to use it for the whole year. For example, perhaps you qualified for TTS in 2016 and you quit or suspended active trading on June 30th, 2017. Or you began active trading with TTS on July 1st, 2017 and continued through year end. You'll include the period of qualification on the Schedule C, that's where you put your trading business expenses with TTS, or on the pass-through entity tax return like the partnership or S-Corp, to deduct the business expenses during that part of the year only. So let's say you started July 1st, or you started August 1st. From that period through year end, you'll deduct your business expenses. You can also use Section 195 startup costs to go back 6 months to capitalize expenses, including education, and also contribute fixed assets, including hard, computers, monitors, and intangible assets to the business to get depreciation, amortization, and expensing. So even though you start mid-year, you can capture a lot of the prior period expenses, but you need to do this in the proper way on your tax return. So if elected, you'll also use the 475 for the TTS period of time too. TTS business expenses. Qualifying for TTS means you can report business expenses as opposed to the more limited investment expenses. Right now, every which way you look, there's a haircut on those investment expenses. And investors will take that. That's better than nothing. Traders are not interested in that. They want the full deduction. Tax reform may wipe away all investment expense deductions, but safeguard the trading business expenses. So this is a big difference in status. Now, business expense treatment gives full ordinary deductions, including one of the biggest ones, home office, education, Section 195 startup expenses, Section 248 organization expenses, margin interest, tangible property expensing, Section 179 100% depreciation, amortization on software, seminars, market data, stock borrow fees, you name it. If you have an expense related to your trading business, you can deduct it. Go back and watch the top 11 tax deductions for active traders, the webinar I did for Interactive Brokers. You can find all those past webinars. You go to their webinar section, sponsored content, GreenTraderTax, and you'll find it all. And you can find it on our website under just the events tab. And then just watch the recording. So let's talk about those investment expenses, which are far reduced. They don't allow home office. They don't allow education, no startup, no organization. They are only allowed as a miscellaneous itemized deduction in excess of 2% of adjusted gross income. So if your AGI is 100,000, the first 2,000 you can't even deduct. So you can see that it's so much less. In that video, I pointed out there was like a huge difference. Go back and see that. And then once you get there, it's not deductible against AMT. Now, tax reform does want to repeal AMT. The IRS further restricts investment expenses with a piece itemized deduction limitation for taxpayers with AGIs over 313, 800 married. That started at 300. It's indexed for inflation. Always watch out for that. Some things are indexed for inflation. Sometimes they're not. Like the Obamacare net investment tax, this surcharge Medicare on unearned income, including investment income, that's not indexed for inflation. And they were hoping to repeal that with the Obamacare repeal, but they didn't get it done. That's still on the books. This particular one is indexed. Now, many states limit itemized deductions too. There is no election for trader tax status. A lot of people get confused. You can claim trader tax status after year end. You can claim it now for 2016. You don't need to make a timely election in advance like you do have to do for the Section 475 MTM and the contemporaneous Forex capital gains election. So I have people come to me all the time. They have a big loss for the current year. They want business ordinary loss treatment. They feel they qualify for trader tax status. They hope that they can write off all the losses against their other income and not have a capital loss limitation. They're very disappointed to learn that they had to make the election by April 18, 2018 for 475 as an individual, or March 15th as an S-Corp or partnership, an existing entity. A new taxpayer can elect it within 75 days of inception. But again, don't confuse 475, which is like graduate school, with trader tax status, which is like undergraduate school. They're related but separate. A lot of people who graduate trader tax status never want 475. They don't elect it on futures. They want to retain the lower 60/40 tax rates on 1256 contracts. They're separate. So you can claim trader tax status for the tax year that just ended and even the prior 3 tax years with amended returns. Now be careful, filing amended tax returns may increase your odds of IRS questions or exam, so be sure of your status. So when you think about it, say to yourself, I got a chunk of these business expenses. I want to deduct those so I can claim that after the fact, but this big batch of losses that I have, I can't claim 475 after the fact. That I had to elect on time. There's no statutory law for trader tax status with objective tests. Statutory law means it's codified, it's written in the law, and then the IRS writes regulations for the code. It's not clear. You can't look it up. How do you qualify or how are you eligible for trader tax status? when statutory law is lacking, we use case law, tax court cases. And we also look to IRS publications, in this case, IRS Publication 550, Chapter 4, Special Rules for Traders. Case law has a two-part test. So this is a boiled down set of content that was born out of all these tax court cases as written by leading tax publishers. Taxpayers' trading activity must be substantial, regular, frequent, continuous. Those are great words, but there's no bright line test. Is 20 trades a week enough, or is 10 trades a week enough? Both could be substantial, regular, frequent, and continuous. You're going to see I lay the golden rule down at 14 to 15 a week. The taxpayer must seek to catch the swings in the daily market movements. Doesn't have to be day trades. Swing trades are fine. But you're looking at daily market movements and profit from these short-term changes rather than profiting from the long-term holding of investments. So if you go into some trades and you're looking for capital appreciation over a several-month horizon, and that's really what your trading philosophy and program is, that's not qualifying. But if you're looking to catch the swings in the daily movements, then yes, you can qualify. So that's case law. It's pretty broad, subject to a lot of interpretation. IRS Pub 550 Chapter 4 Special Rules looks at typical holding periods for securities bought and sold. That's an interesting word, typical, I guess average. The frequency and dollar amount of your trades during the year. So do you have like a big turnover of the trades, dollar amount, significant trades? And frequency, that's a key word. How frequent are you with those executions? The extent to which you pursue the activity to produce income for a livelihood. So much hangs on that word a. Doesn't have to be your principal, primary, main, sole occupation. The extent to which you pursue the activity. That doesn't mean that you absolutely make a living, but you're pursuing the activity to make a living. And the amount of time you devote to the activity. If you're spending a half hour a day and have an automated trading program, you're not spending much time. Again, this is all very helpful, but it leaves you with a lot of unanswered questions. This is not enough content for traders to make a key decision about their eligibility for trader tax status, which is the concrete foundation of your entire tax planning house. If you have a weak, cracked foundation, your trader tax status, all those benefits, the trading benefit house could come crumbling down. So when that house crumbles down and you go to the IRS for a huge tax refund with Section 475, all they have to do is attack the foundation and say it was cracked, that you were not eligible for trader tax status, therefore you can't use 475, therefore they're not going to pay you a huge refund check. So make sure you have a strong foundation for trader tax status eligibility before you build your tax planning house around it. So, GreenTraderTax provides you with golden rules. I base our golden rules on trader tax court cases, and our firms, our CPA firm, Green, Nushwan, Remaining LLC, our vast experience with IRS and state controversy for traders. Controversy means tax notices, exams, appeals, tax court cases. It means when you're battling with an IRS agent or a state agent over all these benefits and the trader tax status. Let's go through the golden rules one at a time. I'm going to start with the big three because these are the ones that are easier for the IRS to verify when they ask you for and you furnish them with all your trading statements, showing the daily activity. They pull out a calendar and they start marking each day that you have a trade and how many trades per day, and they do their calculations. It's laborious, but they'll do it in the exam because so much is riding on it. The volume of trade executions is number one. The trader should make 720 total trades per year per the Pope Court on an annualized basis. So when I refer to an ex-Pope Court, Endicott Court, that was a tax court case involving that taxpayer, and so it's referred to as the Pope Court. It's a recent case, and I think it's a good bright line test to use. It's not an actual bright line test, but it's a pretty good number for the golden rule. If you start July 1st, then you need 360, half of the 720, because it's an annualized number. The court mentioned Pope having 60 trades per month as being sufficient volume. Now, they did not allow Pope to use 475 to get a huge refund, which was the essence of what Pope was trying to achieve. But they did agree that Pope had trader tax status. He just botched or misused the 475 election. It was very elaborate with prop trading and more. So 60 trades per month divided by 4.3 weeks a month, you're coming out to basically 14 total trades a week. Let's round it up to 15 trades per week. Now, when you do your math, count the buy and sell or the open and close separately. Now, if you make a round-trip trade, let's say you make one round trip, a day, that's 2 total trades. You need 2 round trips a day for 4. So one round trip is 2 total trades. Don't get confused about that. Next, the frequency of trade executions. Now, notice I said trade executions on both of these. I'm not talking about unexecuted trades. I'm not talking about simulated or demo trades. I'm not talking about IRA trades. I'm talking about taxable account, trading account, actual live trades that are executed by your broker. You can just count the trade confirmations. So frequency, you should execute trades on close to 4 days per week, almost every week that you trade. That's your goal. So a lot of traders tell me, I have all 5 days, but not every week. So let's say 4 plus, but it's over 4. I think it's wise to prevent an IRS challenge by trading close to 4 days per week, or 75% of available trading days. That's a bit less than 4, which is 80%. Even if you need to make smaller executions with reduced risk on otherwise non-trading days, courts have denied trader tax status with 50% frequency. A lot of cases have 2 days a week. Some have 2.5. If you're 3 days a week, you might squeak by, but why not try to get closer to the 4? So I'm giving a little bit of a cushion here. It's not a good idea to have the tax tail wag the dogs. And any trading you do for trader tax status should have an actual economic risk. So when I'm consulting a client and they come up short and they say, well, I'm willing to trade more and to qualify, and I realize they don't have a lot of business expenses, they're not trading a lot of capital, they're just getting started, so they don't desperately need the tax loss insurance of 475. I advise against it. I don't think that someone should step on the gas to trade more, potentially lose a lot of money and incur more cost just to qualify for a tax status. I think you should trade the way you want to trade and then see where the cards fall. The Endicott Court was very clear that unexecuted trades do not count. I think continuous business activity is another standard that our team could win on in tax court. So, and count unexecuted trades, but that's a long shot, and that's not in the content today. I think we have to deal with the reality on the ground, which is all these court cases, all these factors. But if you have a special situation and you have continuous business activity where you work hard every day of the week, you just don't have all the executed trades, but you have a lot of unexecuted trades. It was like the hotel analogy. You check in Monday, you check out Friday, but the hotel serviced the guest every day of the week. We might have an argument for you, but you need to discuss that with me. It's not in today's content. Let's stick with the more conservative golden rules based on the court cases. Now let's go through calculating the volume of trades per day. So I just said you want 15 trades a week with the Pope Court for volume, and you want frequency of about 4 days a week. So the markets are open. Let's do the math. The markets are open approximately 250 days per year. With personal days and holidays, you might be able to execute a trade on 240 days. It might be less if you have a lot of vacation weeks. So boil it down to what is your available trading days per year. That's your denominator. I'm using 240 here. It might be 230. It might be 220. With a 75% frequency, you would trade on 180 days per year, 240 times 75%. If you're going for the 720 total trades per Pope Court, divided by 180 trading days, that equals 4 total trades per trading day. That's like a nice round number that I like to use. 4 trades per day, 4 days a week. Holding period. The IRS stated that holding period is the most important factor. And in the Endicott court, the IRS said average holding period must be 31 days or less. And that is a bright line test, and it's the only one. Several of the tax court cases involved individual traders. They had significant portfolios, and they traded options actively to manage risk on and off of their stock portfolios. And they never disconnected the two activities, the investing and trading. And when you looked at it all together, the holding periods are really stretched out. They were trading options around 45-day holding periods and holding the stocks much longer. So they were clearly not traders. And the IRS was right to bust them because they cheated on 475 elections, which they didn't make properly. They tried to pull a fast one. And they clearly didn't qualify for trader tax status. They should have ring-fenced their trading in a separate entity and made sure they were trading weekly and monthly options. So the holding period is a bright line test. And if you do the ring fencing and trading the weeklies, you can get the average holding period on the options under 31 days to qualify. Active traders usually make day trades or swing trades with an average holding period of just a few days. They far below the 31 days. Don't hold many trading positions over a month unless you segregate them on a contemporaneous basis as an investment position, and that boots it out of the denominator, which then doesn't count in the holding period calculations. Asadaragi, Nelson, Endicott, Holsinger, those famous tax court cases, which were all losers, they were all options traders trading around stock portfolios, and they didn't heed my advice on this, and they rightfully lost their case. Now, there are bona fide holding period issues for options traders. Options traders may have an average holding period over 31 days if they trade monthly options and keep them open for 1 or more months, even if they don't have a stock portfolio. Many options traders qualify for trader tax status by also trading weekly options, which has gained in use, thereby shortening their average holding period to under 31 days. Let's talk about the impact of lower lot sizes on this math. Now remember, when you go into an exam, the IRS agent is going to start doing the calculations in a way that's favorable to the IRS and may prejudice disfavor your situation. You need to do the math in a way that makes sense based on our golden rules to present your case so that you can win rather than maybe just falling below the status to lose. Some traders scale into trades and executions are broken down into smaller lot sizes. You would like to count those. If you initiate a trade and the broker breaks down the lot sizes without your involvement, the IRS may reject counting the extra volume of trades. But how would they even know that? Options traders have multi-legged positions when they make complex trades as opposed to simple trades, or your credit spreads and the like. We believe you may count each trade confirmation of a complex trade providing you make the execution separately, although this has not come up in tax court cases. So if you have a platform where you can press a button for a complex trade and the platform vendor breaks down the multi-legged positions for you without your involvement, and the IRS knows that, you could see why the IRS would want to balk at you counting the separate legs of the position. Conversely, if you make each one of the separate legs, then clearly you can count it. Let's now move to intention. This is very important, but it's harder for the IRS to verify. A trader must intend to run a business and make a living. When you're an active trader, and that's trading as your livelihood, and you show the IRS what you're doing on a daily basis, and they see how technical, how elaborate, how in-depth, and what's involved, agents are normally blown away. They can't believe what goes on. So, but you got to run it in a business-like manner, trading your own money, trading other people's money. I'm not talking about that. That's investment management. That's another type of business treatment when you trade other people's money. Whether it's active or not active, when you trade other people's money, that's another business activity that can deduct all the business expenses. The investor can't elect 475 because you're doing the trades, they are not doing the trades. With trader tax status, we're talking about trading your own money as a business to make a living. It doesn't have to be your exclusive or primary means of making a living. The key word is a living, which means it can be supplemental for your livelihood. So a lot of traders on the West Coast, they have a full-time job with flexible hours in Silicon Valley, but they wake up early and trade the morning session for the East Coast securities markets and have a great window to trade. And then they monitor their trades during the day, maybe make some more trades, and they do a lot of work at night and on weekends. So they qualify. East Coast traders may have flexible hours and trade from work or trade Forex at night. They can qualify too. Now, don't let an agent bully you in this area, which is very common. Having trading losses does not indicate you lack the intention of making a living. So if you have losses 5 years in a row, an agent may want to say, well, it's a hobby loss, you can't deduct it because you didn't make a profit 3 out of 5 years. And your answer, it's not personal or recreational in nature, so the 3 out of 5 year test does not apply. Then they might say, well, it's a passive loss. And then you say that under the trading rule in section 469, it's not a passive loss. So the bottom line is that you're allowed to deduct your expenses and 475 losses as a perennial losing trader because you still have the intention, maybe an unfounded intention, but you have the intention to run it as a business to make a living. So you just have to give them these standard responses that we have on our site and in our content to win those arguments. Part-time trading is okay. Part-time and money-losing traders face more IRS scrutiny, and individuals face more scrutiny than entities. All those tax court cases, Pope, Nelson, Endicott, Asadaragi, Holsinger, They were all individuals with huge losses on 475, huge Schedule C losses. They were begging to be audited and to get beaten down, and they tried to cheat the IRS and pull a fast one. And then they argued their cases, usually pro se on their own in tax court, and they served up an easy loss to the IRS. At least the IRS in those cases did a good job talking about the law, and that's precedent too. Now, full-time options traders actively trading significant portfolios, those investment portfolios or option portfolios, they may not qualify because they don't have enough volume and frequency, and their average holding period is over 31 days. I've had several clients the past few years. They've come to me. They trade millions of dollars in their taxable account. They trade options, including leaps. Their horizon is 45, 60 days, 90 days. They have significant expenses. They have an outside office. They have several people working for them. They want to deduct all those expenses with trader tax status. They want a retirement plan, health insurance for all their employees. They want all these deductions. They want the tax loss insurance, but they can't have it. They don't trade enough. They don't meet the golden rules, and they're not prepared to change their program, which is highly successful, and they're very wise in making that decision to qualify. So they forego the business expense treatment. You know, keep in mind, most hedge funds, very significant operations, they may have $1 billion under management, hundreds of millions under management, significant operations. They don't qualify for trader tax status. So it's not for everybody, but it is for your very active day and swing traders and for some active options traders. Now, on the other hand, a part-time trader with a full-time job may qualify as a day and swing trader in securities, meeting all our golden rules. And you have to ask yourself, is that fair? Is that good public policy that the full-time options trader who's clearly in the business of trading, has significant operations, doing it full-time, is disenfranchised from business deduction treatment, whereas the part-time trader with a full-time job who has employee benefits in his job and may have very few trading business expenses can get the status? My answer to that is no, that's not good public policy, but we're not talking about public policy here. We're talking about the law, case law, statutory law, and how you navigate through the current tax law and then tax reform changes. Next golden rule, hours, time spent. Our golden rule is 4 hours or more per day, almost every available trading day in the trading business activity. Now, all time counts, including execution of trade orders, research, administration, accounting, education, travel, meetings, creating your algorithms and your automated trading programs, and more. A trading business is exempt from the material participation requirement in the Section 469 passive activity loss rules. So if you're involved with your cousin's business, small business, and you get a K-1, but you're a passive investor, you don't spend much time at all, you're not involved in the management of the business, it's a limited partnership or an LLC, and the K-1 has a loss, you're going to get stuck with a passive loss activity suspension, which you can only deduct against passive activity income, and hedge fund income is not passive activity income, until and unless you sell the investment and you realize the loss in full. Now, if you spend over 500 hours a year in a passive loss activity, the IRS will let you do it as an active business, and the rules are very intricate. We're not covering those today. Bottom line, a trading business is exempt from all that. Anyway, 4 hours a day is more than 500 per year, well more. Don't have many lapses in the trader tax status activity. The IRS has successfully denied TTS in a few court cases by arguing the trader had too many breaks in trading taking several months off during the year. When we do a trader tax status analysis on, let's say, a worksheet, we like to see the 60 trades a month or more every month of the trader tax status period. We don't want to see 100, 20, then 80, and then 30. We want to see a consistent pattern over the 60. If one month goes a little under, that's okay. And again, traders can take vacation, sick time, and have personal time off just like everyone else. Some traders take a break from active trading to recover from recent losses and learn new methods and markets. It's not clear how the IRS will react to that in tax court. You might argue that you have continuous business activity during those months of retooling. You know, it's like changing your display windows in a retail store or changing your production line, retooling, building a new factory. Don't trade one month, visit the grandchildren the next month, trade another month, take vacation the next month. It's got to be continuous. Go back to that case law, frequent, continuous, substantial. Next, the total proceeds from trading. Traders should have gross proceeds in the millions of dollars per year on trading equities. More traders are using options and futures which have lower proceed values. The 1099-B will show the total proceeds. Explain this in the footnotes. Since proceeds for futures and Forex are not reported on 1099s and the IRS won't see the proceed amount. So remember, your futures 1256 contracts, the one-page 1099 just shows the aggregate profit or loss after the unrealized gain or loss is included. So it's showing the net gain or loss. It's not showing total proceeds and cost basis, which your 1099-B for securities is showing. And remember, for Forex, spot Forex, there is no 1099-B. Securities proceeds on a Form 1099-B provide the IRS with a quick indication about qualification for trader tax status. If they see you have hundreds of pages of 1099-B, that's indicating that you probably have way more than the volume you need. They can see that it's consistent throughout the year. It's like every day. And they see a $5, $10, $20 million number. It's a pretty good, fast indication that you got the volume, frequency, and proceeds that they're looking for. And they can kind of see holding periods too. Because with cost basis reporting, there is holding period information, cost basis, and proceeds on the 1099-B. But again, it's not the case for futures, not the case for Forex. Next, operations. Most business traders have multiple monitors. You often hear, oh, I have 3, 4, 5, 6 monitors. Several computers, including a powerful trading computer and backup and laptops. They have mobile devices for, smartphones, tablets. Lots of trading services, subscriptions. Some traders have education expenses, which can be significant costs. For sure, they have high-speed broadband, wireless, and a home office. They have the trappings of a significant operation. What everyday investor needs 6 monitors and a powerful trading computer? And when you look at the trading services they have, why would for level 2 quotes and data feed fees, why would an everyday investor need that? So here's the thing. If you use the office that you have exclusively for business, meeting the requirements for the deduction, so it's not personal use, don't skip reporting a valid home office deduction. Show them the trappings of your business that you meet the operations golden rule. Most businesses have an outside or a home office expense, and you should deduct that too. Most traders have exclusive use. They don't want the kids fooling around with those powerful trading computers and monitors, because the kids will. You don't want your weekend guests looking through your files. That's a separate, exclusive, locked office that you usually have. Take the deduction, deduct the depreciation. You can still get the exclusion on selling your home. You may have to recapture depreciation. The rules are a little different for a home office that's separate from your house on the property versus in the main house. That's all in the guide, Green's 2017 Trader Tax Guide. go for the gusto on that home office deduction. It looks good, it helps you qualify, and it's a powerful tax refund generator. Account size is the next golden rule. Securities traders need to have $25,000 on deposit with a U.S.-based broker to achieve pattern day trader status. And without that status, they will have a hard time qualifying for trader tax status. They won't be able to do day trading. They won't achieve the volume and frequency. So they have more than $25,000 on deposit. Some futures or forex traders don't have that requirement. Reg T. Pattern day trading means you get 4-to-1 intraday leverage rather than 2-to-1, and you can do day trading. Some futures or forex traders have mini account sizes of $5,000 or less, and that won't impress the IRS for trader tax status. We like to see over $15,000 of trading capital to qualify for trader tax status. Now, if you're young, or if you've been unemployed, or if you're just out of cash, and all you can do is put together $10,000 for a trading account, and you already spent $5,000 on education, and you have computers, when you look at your capitalized costs, it's over $15,000, and you probably can claim trader tax status, but that's something you may want to consult with me about. Conversely, if you're a multimillionaire with significant business operations and you have a $5,000 trading account, you're not impressing the IRS with $10,000. You got to get over these requirements that I have here. A lot of this is based on our judgment and our determination and our good practices. So it's not borne out always in a tax court case. And I think we have a great reputation and credibility with the IRS on all these issues. We're like an umpire. We call balls and strikes the way we see them. And you as a manager of your own baseball team may come out and throw dirt on me and say you don't agree, but we need to call balls and strikes fairly because we have the IRS looking over our shoulder, and when it comes time for us to fight for you with the IRS in appeals, and when we slam our hand on the table and say this client has trader tax status and we're going to fight to the end on it, we hope to win because we have that credibility with the IRS. That's something you can throw away in an instant with bad practices. And everyone who works with us knows the integrity of our firm in that regard. Factors that don't qualify for trader tax status. Automated trading without much involvement by the trader. But creating your program qualifies. This is a big area. We've covered it before in other webinars. It's very popular now to write your own algorithms, create your own automated trading programs. There are a lot of vendors out there for providing services in this regard. A lot of brokerage firms let you hook up these systems to their execution platforms for automated execution of. So you have automation of entry and exit signals, automation of execution, and in the end, you're just sitting back and the system is doing all the work, generating the volume easily, the frequency easily, hitting all the golden rules. But do you get credit? So look at this analogy. A plane. The pilot flies a plane manually and with automated controls, computer-aided flying. It's mostly computer-aided, but we want a pilot to override that or to be there when something goes wrong. And there's been articles this past week about pilotless planes, will people fly in them? You got to be in the cockpit. You have to be involved in creating the controls and creating the systems. You can't just be the passenger of the plane, because that's like engaging a professional outside investment manager or a broker, and there's very clear tax court cases about that. So that's the second factor that does not count. So you're actively trading a couple $100,000 in your Interactive Brokers account. But you and your spouse also have a Morgan Stanley managed account with an outside investment manager. who you pay fees to. Those fees that you pay the outside investment manager, those are clearly investment expenses, but the expenses that you have for your Interactive Brokers trading account where you meet trader tax status, those are trading business expenses. You need to separate things. So if you, as back to automated trading, if you come to me and say, I have automation, I easily have volume, frequency, all that, and I spend an hour a day, I ask you, are you doing automation? Because how could you do all that volume for an hour a day? And you say, yes, it's automated. Did you create it? Yes, I created it. Are you a computer professional, a computer scientist, or an IT professional? Oh, no, I'm a marketing professional. Well, how did you do it? Well, I got a vendor that just said, choose from column A, B, or C, tell the system a little bit what you're looking for, and we'll build it for you. I don't think that's sufficient involvement to claim that activity. But conversely, you answer me saying, I am a computer scientist, IT professional, I did code the system, I did create it, then I think you do get credit. So that you should discuss with me. Now, the third factor that does not qualify, your retirement accounts. When I ask you for volume and frequency, don't tell me what's in your retirement accounts or your wife's investment account. Only tell me what's in the taxable trading account, because retirement funds don't carry on a trading business activity. You're not operating a business in your retirement funds. That's not part of your business expense treatment and your activity. Now, let's talk about tax reform, the expected impact on trader tax status. What's the status? Well, Congress is on vacation now. They couldn't get health care repealed, and they're on vacation. And we keep hearing from the president's team that they're going to do tax reform this year, but we don't see any details. They bounced out the border adjustment tax. The House had to give that up. How are they going to pay for a lot of the wish list now? There's no details yet. They're supposedly going to come back from vacation, get the debt ceiling done, get the budget done, and get tax reform done as part of budget reconciliation, and still work on Obamacare too. That's a lot. That's pretty, Congress and President Trump's team are working on tax reform in 2017, and considering delays, I expect tax changes may not be effective until 2018. Let's cross our fingers and hope they're effective this year. I don't think you should wait for new tax legislation. Get started on your 2017 tax planning based on current law, and hopefully tax law changes will favor your planning. Go for the trader tax status now. Go for the new entity now with trader tax status and the 475 election and the health insurance and retirement plan deductions. And then maybe the income in that S-Corp will qualify for the tax reform lower business rate of 15 or 20 or 25%. Trump wants 15%. The House wants 20%. Senator Hatch for the Senate Finance Committee said it might have to be 25%. Trader tax status should be stable with tax changes. TTS works well for 2017. We just went through all that. And tax reform should be the icing on the cake, offering a lower tax rate on business income, hopefully available to a TTS company. You should set up the company now with trader tax status and a 475 election if you don't have a capital loss carryover now. Do well through year end, get all the benefits I just talked about, and then maybe on a long shot, get that lower business rate this year as well in the entity if they pass it this year and it's retroactive to this year. Otherwise, you'll be set up to get it for next year, hopefully. Now, tax reform may also repeal investment expense deductions entirely. It's peanuts now, but they'll repeal it entirely. That makes TTS even more attractive. Now it's more attractive because it's a lot versus a little. After tax reform, it's a lot versus nothing. Now, read my May 18, 2017 blog post, Consider Smart Tax Moves Now That Work with Possible Reform. Watch my June 21st recording, Trader Tax Reform with Robert Greene, and this is added just today. Read my August 7th, 2017 blog post, Traders Need Fair Tax Reform. I need all of you. I need Interactive Brokers' help on this too. I have a petition. It's going to the Big Six tax writers. You can send it also to your senators and representatives. Read the blog post, sign the petition. It's a short list of what we need Congress to safeguard for trader tax status and traders who qualify for it. So let's talk about some closing remarks, questions and answers. Thank you for attending this webinar or watching the recording. IB will send it out to all those who registered. Come over to the GreenTraderTax website for additional information. We have a very extensive resource area in the Trader Tax Center. We have the guide. We have our services. You can chat with us, email us, call the toll-free number, 888-558-5257. So come over to the website, and now I will take a look at a few questions on the board. So that's GreenTraderTax is where you want to go. And let's look at questions. We have time for just a few. Now send your questions to, and I'm going to put this up in the answers right here. And the first one I'm just going to answer here. You can go to info@greencompany.com with your questions. And I'll send that to all. Okay, let's look at some questions here. Let me expand those. And I think we can go a little late if Cynthia allows it. So get your questions on topic if you can, please. Is IB available for U.S. residents? That IB answers, but absolutely, and I see that there was a written answer there. We match up really well with IB because we handle your active traders, and I know Barron's just said that IB was best for active traders. Barron's recommends this almost every year as well. I'm just going to go with initials on the names so people can stay anonymous. PL, any insights on what's pending with the tax reform changes coming? I still think it's heavy lifting. It's still happy talk. It's still keeping up the stock market. A lot of people have looked at these corporate tax cuts. It would be unfair not to include the pass-through entities. They need how are you going to pay for this? I mean, if it busts the budget, how are you going to get it through now? Because it's all happening at the same time. The deficit, the debt ceiling, the budget, and tax reform and Obamacare. And it's all through reconciliation. So it's still happy talk, in my view. Sure, we all want simplification, but what's the simplification? They're not changing anything for you traders with trader tax status. All they're doing is denying a few itemized deductions and expanding the standard deduction. It's not that much tax simplification. It's a lot of promise. I don't think it meets all the promise. I would like to see simplification and reform, but more importantly, look at what I want to see for traders and sign that petition. That's what counts for us, not all this happy talk. Let's boil it down to what works for us. Does IB enforce the patent day trader rule? I'm sure they do. I'm basically a short-term trader investor. Is there a minimum portion of my portfolio? Yeah, you want to ring fence. So you want to take your investments, keep those individually, and ring fence your active trading into a new LLC with S-Corp election if you want the employee benefit plan deductions, and then keep it separate. KL, is an S-Corp better for a Forex trader versus C-Corp? You never want to trade in a C-Corp because there's double taxation, losses don't flow through to you, you don't get the lower 60-40 rates, and you want the lower 60-40 rates on Forex. Read our content on Forex tax treatment. Maybe we'll do another one for IB down the road. You will probably get access to the PowerPoint deck as well through IB. WC, I assume the dollar amount depends on the size of your account. That's correct, absolutely. You just want it to be a lot of active. If your account size is $25,000 and you're only risking $1,000 a day, that's not going to cut the mustard. You want to turn over the account pretty often. That's not one of the golden rules that I put through, but you got to use some common sense too. WW says, we live in Illinois, the state that is broke. There is a replacement tax, 1.5% on your S-Corp. You can use a dual entity solution to avoid that. Look at my Trader Tax Battle of the States blog series in mid-2016. Go to the blog, go to the archive, covered Illinois. You're thinking about moving to Nevada that has a new commerce tax, but traders are exempt from it because it's a passive or investment company. So you can open up an entity in Nevada, but if you live, work, and trade in Illinois, Illinois is still going to tax you. So don't fall for the snake oil salesmen in some of these tax-free states that promise all these tax breaks that don't work. And if you're doing it for asset protection, if you don't register it in your home state, you have no asset protection. So don't fall to the snake oil salesman. JS, there may be answered before. How about my case where I have a full-time job with the flexibility to day trade 4 days, 4 trades a day, 2 to 3 hours a day, spend some time at night to get over 4, do it 4 days a week? Yes, you can qualify. DHS, is green an official part of IB? No, absolutely not. IB has sponsored webinars. They use the term sponsored. We're not paying as a sponsor or anything like that. We are a third party. I am a CPA. I am not a lawyer. I work for Green, Neuschwander, and Manning LLC, and I am also the CEO of GreenTraderTax.com, our content company. We are completely independent, unaffiliated with IB or any other brokerage firm. So, and we don't give investment advice. We only give tax advice. What is it that's income you show? I'm not sure your question, WW. Restate that. Randy S. How is trade defined? Is a round trip? We covered that. Remember, the open and close are 2 separate trades. So you might have 3 total trades on a given day, 1 round trip and 1 open. And then the next day have 1 close and 1 round trip, again 3. So we're counting total. We're not, SS, we're not counting contracts. We're counting executions. So you may want to break down your contracts into separate trades. Looks like I would have more than enough volume because I was counting 3 to 4 averages a round trip. Okay, good. DES, how do you take time off for vacation? DE is a friend of mine. I know who you are. Actually, the prior founder of TradeLog, a great company. Glad you're on vacation now, DE, but I had my vacation. I just came back and had this scheduled in advance. Good to hear from you, DE. DL, is entry into a spread trade 1 or 2 trades, hopefully 2. Again, look at your executions in your own books and records. Keep track of, you should have, by the way, a diary each day. Tell a story of what you did, the volume, the frequency, the scaling in, the scaling out, what you did. That story comes in handy if you ever need it for the IRS. So keep that daily record. SS, we wanted to create an app for all that, but it was too difficult for the app maker and we didn't do it, but maybe one day we will. SS says, if you run an automated trading platform, which would make 720 trades per year and spend approximately 20 hours per week on developing these trade algorithms, would this qualify? Yes, it sounds like it would if you created it. Not just run it, if you created it and manage it and tweak it. So the IRS, this is not clear on the tax return. You're absolutely right. But we don't operate as a firm based on the audit lottery or hiding. We all know in today's day and age that everything is in a fishbowl. Everything will be known. You very well may be called out on it and you need to show it. So you want to have honest integrity and deal with all these issues in an above board manner, because otherwise it's a losing case. And again, don't build a trader tax status house on a weak foundation with cracks. It could all come tumbling down on you. KS, if I execute a trade to sell 4 put weekly options, is that one? Again, I'm not exactly sure how you phrased the question, but look at each trade confirmation and that you can claim credit for making that trade execution, that it didn't just happen to you. HH. So to start a fund managing other people's money, the tax advantages would not be applicable. No, A hedge fund can have trader tax status if it qualifies to deduct the management fees and incentive fees that it pays the management company. Now the management company is getting a carried interest, a profit allocation. President Trump promised on his campaign to repeal carried interest. So it would go back to being an incentive fee. So the hedge fund would have these huge payments to the management company, which is you, and it could not deduct those. So if everything happens the way it's supposed to happen with tax reform, a lot of hedge funds are going to become interested in trader tax status and maybe start over trading. Now, they may not want 475 because they don't want to pick up unrealized gains at year end and then have investors ask for a distribution to pay the taxes on the unrealized gains. But then again, if they're trading more, they'll have less open positions. That's a separate webinar that we'll do down the road, investment management. TR, and jump in if I'm running too late on all this, Cynthia, but I'll try to get all these questions answered, and you jump in when we're running too late. Can a trader...
You're doing just fine, Robert. We appreciate all your insights here, so keep going.
Okay, thank you, Cynthia. TR, can a trader who meets all the golden rules qualify for TTS without forming an S-Corp or LLC? Absolutely. Here's how it works. You come to me. If I realize that you've been qualifying since January 1st and you're planning to qualify through year end, and yes, we may want to form an LLC with S-Corp status for now through year end, but we can also claim trader tax status year to date as a sole proprietor unincorporated business, add a Schedule C to your 2017 tax return to deduct your trading business expenses year to date. And not use 475 because you didn't elect that on time, but use it in the entity going forward because you do elect it within 75 days of inception. JH asks, total proceeds in the millions per year seems to make most individual traders not qualifying. No, millions a year could look good. I'm reading these questions real fast. I may not be interpreting them quickly. I'm trying to do this on the fly. Follow up with me if you don't feel I answered your question properly. Send those emails to info@greencompany.com. Just come to our website. There's a web contact form if you prefer. Chat with us. Definitely follow up with us. We have a great team to help, and I jump in on a lot of the follow-ups as well. And I will definitely do it right after we finish this session while Cynthia works on the recording. I will attend to those emails, so send them along. JS, how does a person with 15,000 trading capital meet the millions of dollars? Well, you're not going to meet the millions of dollars. Every factor is not a standalone factor. They're tied together. Assessing the factors is as much an art as a science. So you have to, again, always apply common sense. But a lot of traders have more capital and they do get the millions of dollars. And they may not if they're a lower, it depends on what kind of stocks they're trading as well. So I ask, if you are over 59.5, is IRA account considered your income account? No. Your IRA account is tax deferred until you take distributions that are taxable income. If you take a withdrawal before age 59.5, it's an early withdrawal, subjecting you to the 10% excise tax reported on Form 5329. Excuse me, 5329. So be very careful about that. There are a lot of traders want access to those IRA funds, so they take a withdrawal, they pay taxes, they pay the 10% excise tax penalty, even sometimes it's a surprise to them. They go ahead, trade the money, lose it, don't have a 475 election, have a capital loss limitation, but still have to pay taxes on the distribution. That's a mistake. You can trade your retirement funds. You just can't do it with prohibited transactions or self-dealing. Read my guide about that. Watch prior recordings on our website about that. There's a lot of do's and don'ts for your IRAs. There are ways to set up an S-Corp, have a solo 401k, do a rollover from the IRA, then do a qualified plan loan in the 401k. Read our content on that. Don't fall into pitfalls, which are very common and very costly. BLS, can you use an existing active LLC. Well, that won't be able to make a 475 election, and it could confuse the IRS. And you don't want to use an existing entity that has another business, because that will undermine the trader tax status. It's very low cost and easy to set up a new entity. Consult with me about it. That's the first step. You have a 30-minute consultation. I assess your trader tax status, where you stand on elections, whether you need an entity, what type of entity. Then you upgrade to our entity formation service. You do not just sign up for the entity formation service, because I may talk you out of the entity. So you do the consultation first. Forgive me for fast talking here. I'm trying to fit in all the questions. WC. And try not to ask multiple questions so we have a chance for everyone else to ask. Total proceeds, that's what's on the 1099 on the confirmations. WL, it's a 30-minute consultation or a 15-minute one. It's on our website. You just click, you read about it, you purchase it online, you get immediate access to my calendar, then you schedule within a couple of days or by the next day, not same day, and then you're booked with me and we have the consult. And the prices are on the website and they're very reasonable. We don't use, even though I'm a New Yorker, resident of Connecticut, but also second home in New York City, we don't have New York City rates. We have national rates. Most of our operations are down south. So we have great, if you're in a big city, we have great rates. If you're in a small town, we have fair rates. We have good rates, and you can get a business deduction out of it with trader tax status. RM. So on 475 or TTS, we can deduct health premiums. No, on TTS, you can form an S-Corp, and the S-Corp can initiate officer compensation and deduct the health insurance premiums for the officer on that W-2 and not pay payroll taxes as an offset. We have prior content, including webinars with IB, on all that. So look at the entity webinars. AN. Where can we find more information regarding tax benefit algorithms? Look at some of the content on our site. Just search that term. The 11 top deductions, I think we talked about it, and it's in the guide. What do you recommend for active futures traders? Stay with 1256 for the lower 60/40 rates, but use TTS for all your business deductions and the S-Corp for the retirement and health deductions, just like you said. You just don't want to elect 475, because then you would forego the lower 60/40 breaks with 1256 contracts, where 60% is a long-term capital gain, where the tax rates are about half as much as the ordinary rates on short-term. What is the least amount of dollar volume necessary? You know, I don't really look at the dollar volume that much. I'm really looking at the volume of trades and the frequency more. Don't get hung up on proceeds. I think it's like someone pointed out, you may have a lower capital, so a lower proceeds amount. It's not enough of a nice, it's not good enough to look at in isolation. LL, if I have a separate entity with 475, but I also have a personal investment account with long-term holdings, that's great. That's what you want to do. Are there restrictions on whether I can trade the same securities? But yes, there are issues. There are lots of issues. If you ring fence in an entity and you have investments separately, you should be okay on all these accounts. But if you elect mark to market as an individual on an individual trading account and also ring fence investments individually, you have a big problem with 475. And because the IRS can boot it from one area to the other. This gets into some complex questions. Look on our website for blog posts about the IRS playing havoc with 475. I cover all that in depth. I don't have time to do it right now. So you're right on track. You want to ring fence in a separate entity, use 475, and then it's okay to trade some of the same positions in your individual account. AN, best practices on algorithms. Again, go to our other content, check with me about it. We can't cover it all here. KY, for an S-Corp election, what about the excess compensation? You're not going to have excess compensation. The most officer salary you're going to have is $144K to drive the $60,000 over age 50 solo 401K plan, which includes the $36,000 profit sharing plan. So 144 times the 25% gets to the 36K. That's all you need for compensation. And you don't need reasonable compensation rules because the underlying income is not earned income. So go to our content and all that. It covers all those issues. TB, when I say content, that means blog posts, webinars, premium webinars, and the guide. It's a combination of those things. TB, trade my personal Forex fund over 200K with my single member LLC. Believe I fulfill TTS according to what you mentioned. I'm planning to add investors in the near future. Well, if you're going to add, you want to talk to the right attorney about all that. But yeah, if your fund has trader tax status, you're going to pass through business expense treatment on all the K1s. That's a lot better than passing through investment expenses. And if they do repeal carried interest, which is not really in the recent tax reform plans, it was in President Trump's campaign. But I haven't really seen repeal of carried interest in all the recent updates about the promises. I wouldn't call them details. It's going to be hard to imagine how they leave that out in the end, because someone's going to say, why are you leaving this for those rich hedge fund guys and private equity people? I have arguments why carried interest is fair. It's a lot bigger than just hedge funds and private equity. It's for you small traders too. It's sweat equity, but let's not go into that now. What about traders who have a U.S. broker in order that they trade, how taxes apply? I'm not sure what that question is. Can 1099 prop trading be considered self-employment? If you're a prop trader, independent contractor, getting a 1099 miscellaneous, you're a consultant. You're getting paid advisory fees. That's a business on a Schedule C. That's not retail trading with trader tax status. So yeah, you can have business expenses as that. I have a whole chapter in our guide, a whole page in our Trader Tax Center on prop trading. Read that. Chaos, I'm just going to get a few more questions and then we're going to wrap up because we're going to go too long. If I have a tax loss in my margin account, if I change the trader tax status, can I use it? No, you had to make the 475 election. TTS just gave you the right to make the election, but you probably missed the election, and now you're stuck with a capital loss limitation. A DL, yeah, the LLC can elect S-Corp. KT, what would be the best way to show the frequency? You want to take out your calendar, every day mark down at least one trade. Just need that one trade on that day. You don't need 4 trades on that day. And then see in the calendar, yeah, that's 4 days of the 5. And that's the average. So do it with a worksheet. Traders know how to use worksheets. Traders know how to figure out math. I mean, trading is all about math. So just use some common sense and look at our content. JK, just signed your petition. Thanks for taking the time. Fantastic. Right now, the petition is on standunited.org. That's a right-to-center petition company. Most of your petition companies are left of center. I chose Stand United because I figured that maybe the big 6 who are writing tax reform, Speaker Ryan, Ways and Means Chairman Brady, Leader Hatch, Senate Majority Leader Mitch McConnell, Treasury Secretary Mnuchin, and Economic Director Gary Cohn, they're all Republicans. They probably will respond better to a Stand United petition. So I'm getting it all together later today. I'll send out an email about it over the next couple of days, not today. And that's when I need everybody to call and get traders to sign it. Hopefully IB will help me with it as well. But I haven't discussed it with them yet, so it's not fair to really spring that on them in this webinar. Has my question been posted? I don't know about that. Okay, SS, I only trade futures. I don't think I need a 475. Right, you do not want to give up the lower 60-40 rates. 475 is tax loss insurance. For a securities trader without a capital loss carryover, it's free tax loss insurance. Your house burns down, you get a big refund check. There's no premium because you're paying the same tax on MTM ordinary income as short-term capital gains. But for a futures trader, it's very expensive tax loss insurance because you're giving up the lower 60-40 tax rates, and that's like a high premium, to use that metaphor. And hopefully I didn't overuse it. DA, Just to be clear, I can write off trading conferences such as the Traders Expo. If you have trader tax status, yes, you can. If you do not have trader tax status, you may not, because under Section 274H7, the IRS banned seminars and conferences from investment expense treatment. BB, does a lot portion count proportionally? Look at the lot breakdown. DE, post your question again if you thought I didn't answer it right. VS, in a trading entity, do you report gross proceeds as trading revenue? Absolutely not. A lot of your local accountants, they'll get wind of some of this. They'll say, oh, trader tax status, it's a business. They'll put your proceeds on Schedule C as revenues. They'll put your cost basis as cost of goods sold. They'll put the net loss on Schedule C as a business loss. It's a guaranteed audit. You're going to get bounced on that. It's absolutely wrong. It's totally botching and mishandling the return. Your trades, securities go on Form 8949 with the cost basis reporting, and if you elect 475, it goes on Form 4797. It absolutely does not go on Schedule C. DS, yes, the recording will be available. BL, if I trade 4 contracts, I don't want to get into these breakdown questions too much because you may not ask them clearly, I may not address them clearly, and we may confuse it. And I don't know if I have much more to say about that. And there's a lot more questions about that. DA, if I filed an extension, can I claim at TTS? Yes. That was great to file the extension, pay what you think you owed. Now you're waiting to file your individual return by October 15th. You check our content, you decide you do qualify, maybe you consult with me, and then you go and add a Schedule C to your 2016 tax return, add all your business expenses, and increase your refund by thousands of dollars, or lower your tax liability by thousands. WL, do you offer any discount? Yes, the initial 30-minute consultation is $25 less than our ongoing consultation. So it's not based on attending the session, because people are going to watch this recording 2 months, 3 months from now and then ask for it, and it wouldn't be appropriate. So we do have a discount for the initial consultation. JK, if I am under PDT but scale in and out, yeah, you might qualify, because again, if you think you hit the numbers and you're not sure, check with me in a consult. It's certainly worth the price of admission. You're going to get so much out of that consultation that it's really worth it to do it. KY, and you this way know you have a solid foundation to build the house. It's sort of like having an inspector inspect your house to make sure it's safe, to get a certificate of occupancy. KY, S-Corp follow-up queue, not sure what that was. DL, why don't you just trade in retirement accounts? If you just trade retirement accounts, you can't have trader tax status expenses, but it's not that bad. Read my content about it. In a sense, you're getting the benefit of all the losses because you're reducing the account size. And so there's less money to distribute. So you're getting the benefit of the losses. It's deferred until the distributions. You can go to a trustee and say, I want to be reimbursed for my Section 212 investment expenses, not TTS expenses, including home office education, but your Section 212 investment expenses, and the intermediary will help you do that. Check my content on that. KY, S-Corp, should all earnings be distributed? No. You're only doing the W-2 income to drive the solo 401k or the defined benefit retirement plan. So our traders with the S-Corp, they have no salary during the year. At year end, they know they're going to add the health insurance to the W-2 at a minimum. If they're profitable, they're going to focus on the elective deferral for the solo 401k. That's $18K. Over age 50, another $6,000 to $24K. If they're highly profitable and they want to go for the profit sharing plan, then they beef up the salary going up to $144K to get the $36K profit sharing plan. We make those decisions with our clients in late November, early December, and then execute payroll with Paychecks, the outside vendor that we recommend, who has a team dedicated to our clients. We have a lot of content on this. Our entity clients need to be in touch with the content. work with our professionals to get it done properly, because it all must be executed properly before year end. Otherwise, you miss the boat. Yeah, on the half-hour consultation, I send you a full memo, really clear on what we discussed, what my recommendations are, next steps. So it not only gives you a chance to think about it, go over it, it's in writing, it's rock solid, it's good for you, but it's good for my partners who take the baton from me when you move over to tax compliance. So they pick right up where I left off. And this way, in a sense, you're getting the benefit of the consult into our other services. JS, I am confused about proceeds. Let's not get hung up on that one. Let's skip that one if necessary. JJ, is there, because I think that's what, I don't even include proceeds in all my golden rules when I talk about them. Don't get hung up on that. JJ, is there a threshold of income to follow in becoming an S-Corp? Well, if you don't need a health insurance deduction because your spouse has it, or you clearly have ex-employer provided, which is not deductible, and or you're on Medicare, and you don't need a retirement plan deduction, you don't even want to contribute to that right now, then you don't need the S-Corp. You might just do with a spousal general partnership or a spousal LLC filing a partnership, or just remaining a sole proprietor trader. That's what you do in the initial consultation with me. Thank you for those for saying great job. I appreciate it. The consults that I just asked about, you can get on my schedule usually within the next day or the day after that, unless it's the busiest times of the year, but certainly within 3 or 4 days. My vacation season's over now. How long does it take for the entity? You get on my schedule, we form it. It takes about a week to get it back from the state. You can sometimes go for a 24-hour turnaround, and then it takes our outside attorney 1 to 2 days to do all the paperwork. So I see a lot of great jobs. Thank you all. Cynthia, I got all the questions done. So
Robert,
everyone,
you did a tremendous job getting in all of those questions. We really do appreciate the generosity that you've shown here today in answering everyone's questions. So thank you all very much for that. Now, what I'm going to do is give Robert a chance to catch his breath. So we've been at this quite a while. But I do want to show my screen with you. Now notice on here, we have been recording today's event, and you can access not only today's session, but also Robert's previous presentations by going to the education menu. Notice here, there's webinars and short videos. The recorded webinars will take you to a page where you can access and even search by particular items. So I'm going to put in here green. Notice when I do that, you'll also be able to see all of his prior webinars. Notice a link to the recording is provided, and then if you see all the way over on the right hand side, you'll find the webinar notes are available as well. So today's session, I'll be putting that out there just as quickly as I can, and you'll all be getting a direct link to not only the recorded playback, but also to Robert's notes here this afternoon. Simply watch your email later on today. So with that, Robert, once again, I want to thank you. This has been a tremendous session, very informative. And also what I'd like to do is leave this, I'm going to bring up your slides one more time and leave this on the information slide to get in touch with you if anyone has any further questions. So with that, we are going to conclude our event today. Thanks all for sticking with us this long. We certainly appreciate the time that you've spent in joining us. And Robert, thank you so much for the presentation. By the way, we're working on a new item coming up for September 12th, and I hope to have that posted within the next few days on the Interactive Broker site as well. So thanks to all. You can exit using the X in the upper right-hand corner of your screen. Have a great day, everyone, and we'll see you next time. Thanks, everyone. Have a good one.